Hi, Candice, how are you?
Oh, sorry, my laptop's playing off again.
Oh, I can
Oh,
hear.
there we go. I just had to unmute it.
Okay. I must apologize. My email keeps on calling you Madison.
It's okay. It happens daily.
Oh, really? Okay. I just thought I'd catch up with you because um, uh, I don't know to what degree you're involved in accounting, but some of the PowerPoint that I'll be presenting Um, we can brush off quickly. You can ask questions anytime. Just I'll share with you what we normally share into a home group here at the college. Good point to see that you've got a pad and a pen just in case. It's always good to have that because it's easy to say, well, I'll remember, sure. And then later on, so many things happen and you say, where are we? So before we go anywhere, I'll just share this PowerPoint. It's probably be too long for this time, and I'll probably need to make another time. Would
Yep,
a Tuesday at 10:30 next week be suitable?
perfect. Yeah,
Okay, all right. Well, I'll put that in my diary and we'll go from there. I'll go straight on to the presentation there. Um, where are we here? Boom, boom, boom. Okay, can you see this jar of money? Yeah, that's
yep,
always interesting, isn't it?
yeah.
Okay. Um, this is the BSB Fin 501, which is the business, finance, and the five designates the diploma level. So it's a diploma level unit um, on managing budgets and financial plans. Um, Obviously, this is copyrighted. Um, we first of all, welcome. And we do some housekeeping in class normally. And even with students online, we say to them, well, housekeeping is important. Uh, Most of the time, we kind of don't think of it, but even in our students in class, if they have to connect their laptops to a PowerPoint, that becomes a hazard, um, a safety hazard. So we say to them, put a chair in the way where your cord is, going to the wall so that people will know not to go this way. So it's a safety thing. Um, but this is one of our requirements. Um, we also say to people in class, obviously, it's all set up and there is signage at every door telling you where to go in case of emergency, what paths to follow, etc. Uh, Now, you haven't got that because you're not in our class. However, with students online, I always say to them, um, you have to have a plan of escape in case some emergency happens. Um, worked out beforehand. It's not when the fire happens that you say, now, what do I do now? You've got to be prepared beforehand, escape through a window or through a door or whatever. Or if you're on the ground floor, of course, a window would not be suitable for a higher floor, but work a plan of escape beforehand. And I do that at every session um, because we've always got different students joining in. So I've got to repeat myself. But this is our standard uh, safety procedure, preparing people for emergency. Um, our plan also escapes outside the building, and when they're outside the building, there is a place for reassemblement where our office lady checks everybody on the list to see that all students are here. Course outlines are usually posted on the doors, but since we've gone digital, we don't because basically they've got it in a learner's guide. So that makes it very easy. Um, and the assessment requirements, uh, in some situations, there are dates to meet, etc. We don't stick to dates because we're involved in adult learning, which
Yeah.
means that we've all got a life, and sometimes our life doesn't always meet our teaching schedule. So we don't really have any dates for submission. We simply let you submit in time. Obviously, if we don't hear from you for any length of time, well, then we'll just catch up to see what's happening. Basically, there could be some difficulty or whatever. Um, now, we'll skip through the icebreaker because this is for a discussion in a group of students. And this is session one, all to do with money, planning, financial management approaches. Um, as an introduction, we look at basic principles, generally accepted accounting principles. GAAP is the acronym that will come up here and there in the course because they are standard accepted accounting principles that are accepted worldwide, and we make everyone aware of them. And we'll be looking at them in detail a bit later on. And how to build and manage financial plans. So that's for this first session as an introduction. Some keywords you'll find in your learner's guide. There is also a list of keywords that are used through the text. And of course, like in any legal procedures, you need to know the meaning of the word, what is really meant, especially with um, students from a non-speaking background. I find that when it says list, blah, 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 they think you want a list plus a description, blah, blah, blah. And I keep saying, no, it's a list. A list is just a list. Uh, when we want the description, we'll tell you. Please explain the advantages and disadvantages of this or that. So we talk a lot in accounting about revenue uh, built when uh, sales are made and ownership of goods passed on from the seller to the buyer. Expenses, as you know, company uses goods and services, and opposites of revenue, and matching has to do with matching the revenue to the expenses. And we'll talk a bit more about the double entry accounting in a minute. Um, some more keywords, costs, obviously, cost of items measured at value for the time that you bought them. Obviously, with inflation, money costs always change, but we look at very sort of specific on that day you bought such and such as per your receipt. Objectivity, data put into the accounting system. Now, um, accounting is a funny beast in a way because you can make accounting do anything or say anything. You know, you can buy something that will be a part of the office equipment, but it could also be a personal fountain pen for myself worth $150. And I could disguise it as uh, office equipment. And as long as nobody checks and asks any question, there's no problem. But the receipt still shows that a fountain pen for $150 has been bought on such a date. So we uh, advise that we need to approach the whole system with objectivity and not be subject to all sorts of things that could disguise things and what have you. So these are some of the uh, so many terms that people use in accounting to discuss things. Uh, Continuity assumption should show that the business can continue to operate in the future. It's actually become illegal when an accountant sees that business figures show that the business will not be going on. and at that time, the accountant meets the board, and usually they've got reasons why they've got, bills outstanding or whatever, an income coming or a new projects being onboarded or whatever. But this is a bit of a red flag, if you like. Um, you can't continue running a business if you know that you just won't have the income next month. It would
Yeah.
be unfair to every new person that you enroll. Um, Still keywords, a unit of measure assumption. At the beginning, you need to determine whether you're going to be dealing in Australian dollars or different currencies, providing it's consistent through the whole system. That makes things simple. So if you work in Australian dollars, then here it is. In the, I think the accounting um, for the GST, they ask you first up, are you going to be writing your book in actual dollars, as in you spend $100 today, or you receive $100 from someone, or is it going to be accrual, which means that, well, I've got the promise of $300, but I won't write them into the book because they're not here yet. They're coming in 2 or 3 weeks' time. So that's the major difference. And a separate entity assumption, usually the book that you're working on or the journal you're working on um, deals with one entity, uh, whether it's a recorded entity or a personal. Uh, Probably I need to explain the aspect of entity. Not everybody is aware, you probably are, but the fact that say, me and my wife, for instance, we've started a not-for-profit association called Leadership Australia, but in 1994, it's still been going on today. Then, when it's dealing from Leadership Australia, it is nothing to do with me or my financial income or debit. Neither is my wife's. The entity, Leadership Australia, is a whole new person, invisible person called Leadership Australia, with two people responsible, my wife and I. So that's what we mean by entity. So when you do a book or a journal, then it's got to be to do with one entity. And then if you receive or spend money towards another entity, it's marked as such to show that it's a different. So obviously, your personal income doesn't get registered anywhere in that journal unless it's a payment to yourself or from yourself to that entity. Now the GAAP is very important. Principle of regularity. In accounting, these are generally accepted principles of accounting. Principle of regularity. Uh, you're going to be doing your accounting in a regular fashion, and you're probably going to stick to conventions that would be pretty well constant. When you call something rent, then if you call it rent for whatever building it is, then every time you say rent, it will be to that building. If you got another building receiving rent, then it would have to be recorded as rent too, relating to a second building, etc. So it's to help clarify things and make it simple for an auditor in your accounting later on. Principle of consistency. It's just going to be consistent with what's happening. A lot of, for instance, your rent, for instance, if you're renting a building, the first time you would put all the details as to who the rent is from and what have you, or to. But after that, simply mentioning rent, we know it's relating to that one aspect. If something changes, well, then if you vacate premises and do something else, then you have to be rent at 3 Roger Street or rent at 6 whatever, so that it is seen that you've got a consistency in the way you're recording the accounting. Um, Principle of sincerity. Um, this comes into the dilemma of conscience that the people have. People can see things in different ways depending on who is asking the question. So an accountant has got to be sincere in what he says and not disguise things in a different way. Uh, Principle of permanence of methods. Uh, if you stick to a method, that makes it very simple, and that makes it easy for everyone. Because in 10 years' time, when you're not there anymore, someone auditing the books would need to find a certain permanence of method happening. Hopefully, the next accounting manager will be using the similar setup of the past to make it simple. Principle of non-compensation, very interesting. I discovered that lately that if you have, say, gold or silver in the bank, um, your accounts shows that you have deposited $6,000 of gold in the bank. But actually, there is a principle of compensation in the bank, which means that if you come back 3 years later and say, I want my gold back, they've got the right to say, we can't give you your gold back, but we'll give you compensation for your gold.
Oh.
Although your account says you have put gold in the bank, right? The bank has the right to say, well, yes, but we've got a rule of compensation, which means that um, uh, we can't give you your gold back, but we can give you the equivalent of the gold today at the gold value, which is pretty unfair, I thought, but because
Yeah.
I do sort of store gold and silver, and then I find myself, I felt, can you imagine the bank closes their doors? What do? You got
Oh.
money in the account and you're stuck, you don't have the money. So I believe that the only gold that's real is the gold in your hand,
Mhm.
not anywhere else because of this compensation business. So in accounting, we use the principle of non-compensation, which means that what we write is what it is. So if I say I bought a $150 fountain pen, then it is $100 fountain pen. It's not nothing else. It's not a compensate. It's compensated by something else. You know, um, Principle of prudence. Accountants need to be prudent in what they do, and always cover yourself when you state something in an accounting or in a journal. You need to be specific enough to make sure that you clearly understand what you're saying, and anybody else will not misunderstand it in another way. So it's up to you to be as prudent as possible, mainly to cover your back, basically. Uh, Principle of continuity. Uh, you should see through your book the continuity of your actions and the way you purchase things and etc. Uh, Principle of periodicity. Um, there may be some periods, like maybe your electricity bill may be 3 monthly, right? In an accounting journal, you don't have to keep repeating that it's only 3 monthly. You simply do it at first. The first time you enter it, you say accounting for electricity, so many dollars. Um, uh, 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 Done on a term basis at whatever company. And then from then on, if you say electricity, it's understood that it's a periodical thing that happens every 3 months, and we don't expect it every month. Or if it is every month, then it's got to be a periodicity of monthly, right? But that makes this simple, but they're very good principles that to adhere to because it clears the mind. You don't get foggy with all sorts of ideas. Um, Principle of materiality. The same thing. If it's a material, if you say it's a desk, it's not a virtual desk. It is a desk.
Desk.
Right. Uh, so because nowadays, you got all sorts of, I said to my wife the other day, oh, we had a meeting with our student we use the CBSA, which is a virtual company with all sorts, accounting managers, marketing managers, all sorts. And every so often our students receive an email from one of these virtual people and are asked to do something or verify something or whatever. And uh, I said to my wife, oh, the students had this message from the marketing manager asking them to address something. And and she said, oh, how many marketing managers do you have? I said, well, I don't know. They're virtual. So there could be one, there could be many, you don't know. Just an email happens and it's called, this is from Jason, whatever. I don't even know if he exists, but it doesn't matter. It's a virtual assistant. Um, so it's not a material one. Uh, Principle of utmost good faith. Everything we do in accounting must be done in good faith. We need to do everything to the expected competency that is expected from an accountant or a person involved in bookkeeping. Um, and we accept it in good faith until it's discovered that it's not in good faith and something's really gone wrong and someone's been cooking the books. Then it becomes a major investigation. Um, so these are the general understanding about bookkeeping. Record keeping and auditing. You probably being a government department, you may be audited by your manager
Yep.
regularly or systematically or at least yearly. Probably usually in the process of planning the next um, budget happening in the department, or the rehearsing or the improving or the reducing of the budget. It's interesting with budget, it's it's always going to be increasing because nobody wants a reduced budget. Just in case we need more people or more material, we don't want to sell ourselves short. Just in case we sell ourselves short, and then when there is a higher demand, then we're faced with a challenge, and we have to ask for the budget to be increased, which looks
And-
really bad for ourselves. We may as
Oh,
well
God.
leave it as it is, or even improve it just in case.
Yeah.
Well, inflation is good because that's a good excuse to say, well, we need to prepare for the future. You know. Um, Now, having worked on key principles, then we need to look at accountability, transparency, integrity, protection, and compliance. Uh, Compliance can involve a few different levels. There may be compliance that will be checked by your direct manager. There may be compliance that is required for a whole department. Um, and I think I've noticed at the moment the national government departments are going through uh, a check on how they've spent money. And it's interesting how creative people can be in showing how they have done the right thing without telling you exactly what they've done. And but people can be very creative. But anyhow, um, we don't dwell so much in that. This is only just to fill in the background for you. that at least there's going to be somewhere along the line some accountability, some transparency needed, uh, integrity, protection, uh, and compliance. So you may have your insurance will be part of protection, etc. Um, so that if you look after a building, then you make sure it is insured. I was just telling one of our students, he was working a budget for someone who was going to run a training course in Ballarat, and he was going to hire a car. And my first question was, does the car include insurance? And he said, oh, I don't know. And I said, well, you may hire a car for $200 a day and end up with a bill for $10,000 for a scratch on the car. So don't you think it would be wiser to inquire from the suppliers and find one that's got insurance included as a protection uh, for you and for the department? Uh, Now, key principles, we've looked at locate and interpret policies. So um, we find that a lot of what is done in life um, is usually controlled by policies that have already been written in a department uh, and have been updated maybe yearly at least, or when things change. So you need to be aware that you need to locate the policies. There may be policies that say, for instance, this one particular student was talking about renting a car and the staff having to stay overnight in Bendigo, where they were doing the training, overnight in the hotel. And then he had to research then the policy of the department that an allowance of so many dollars was allowed per, per person working on the program, an allowance for food allocation for the day at the hotel, etc. Hotel fees, all that sort of thing. Right. And so he had to look at the policy. Well, first of all, he had to look at the legislation to make sure we were online with the HR requirements, provisions of our company, and then he had to look at the uh, local policy of our department to make sure that we were complying with all these uh, compliance. You may not have that, but it's a good thing to know that uh, this is so. Now, the aspect of retention is interesting. In accounting, for instance, you may have, for instance, if you bought a computer, or probably not a computer because they go out of fashion so quickly. But if you bought a desk or whatever, then at the end of the year, the desk is really a capital expenditure. If you close the business, the desk would still be there to sell and to recoup some of your money. So uh, when it comes to what we call capital gains um, or capital expenditure, and then this capital expenditure may increase. You may buy a building for 200,000 and sell it for 300,000. So the sale of a building is a cost of so many dollars, but it doesn't. It is as a cost in a different way because it's a cost with a residual value, and so when you're using capital material stuff, like a desk or whatever, then there would be, according to the taxation office, there would be a 12.5% depreciation on the desk. So at the end of the year, or before you do finish your books, then you would have a journal entry that doesn't show a receipt for the 12.5% of portion of the desk because the desk is still there and it still costs $1,000 to start with, but you would register a loss of 12.5% of the value of the desk, and then your next year would show the carried across value of the desk being what is it, 80 something percent, 85, 6% of its original value because of the depreciation that's happened until the depreciation is completely finished. And then the desk is worth nothing. So when the depreciation is finished, which is 3 years or 5 years or whatever, then it's written off the books and can be sold for nothing to anybody, and they earn the desk. So, and of course, when it comes to the quality materials, often this is part of conditions of when you buy something, you've not only got to have a good financial value, but also it's got to be comparatively a good value compared to what else is available. So often you get 2 or 3 quotes, and then the lowest one is the best one if the quality is the same right across. Then we follow with a little video that gives you a quick run on accounting or bookkeeping.
A budget
Can you
is an
hear that?
important tool for any business, but
Okay.
learning how to effectively use your budget can be daunting. So, here are some quick tips to help you on your way. Set realistic expectations. Don't budget to double sales if you aren't doing anything different in your business. Justify your proposed growth with plans and strategies if you're going to include it in your budget. Separate your fixed and variable expenses. Fixed expenses don't change with sales activity, but variable costs do. Variable costs are things like direct material costs, labor costs, and sales commissions, all the things that increase along with your sales. Variable costs need to be included in your budget, aligned with increased sales. Fixed costs are things like rent, internet, insurance, and general overheads. These are not generally affected by an increase in sales. Categorize your expenses. Costs like personnel, office, and occupancy costs should be grouped together in your budget. This will allow you to spot trends more easily. Allow for contingencies. It's true that nothing ever goes to plan, especially in a business. Include a buffer in your budget, just in case. Check for adequacy. Will the expenses you budgeted for be enough to cover the sales generated? For example, you may have a marketing plan saying you're going to visit 1,000 distributors across the country, and this will generate $50,000 worth of extra sales. That's all well and good, but you need to make sure you also budgeted for the people needed to make those sales. This includes the travel costs incurred, such as flights, accommodation, and meals. Linking your operational plans with your budget is a great way of knowing how your business is traveling and allows you to keep on top of expenses as they happen. If you'd like to learn more, why not watch our next video on breaking even or download a profit and loss budget template?
Right. We'll stop here because I realize half an hour is already gone. But
Oh,
just
so
give you an idea that when we budgeting something, you've got a lot of things to think about. And that's all to do with the planning, and that comes with experience. You don't get it right the first time, but it comes with experience. The more you budget, the more your budget will be accurate. All things being equal, unfortunately, they're not equal. So you're always behind the 8 ball, really. But as long as you do things in good conscience and with clarity, and then it's accepted. Everybody accepts that nobody's perfect. Nobody can jump a tall building in one single bound. And if someone promises you that, you can be sure they're fibbing. So it's best in budgeting, in planning as much as is humanly possible to plan and to add a little buffer. Like when in term of time management myself, when I was in business for a large organization, I planned 20% of my time to be free. So because I knew that after a while, an appointment for 20 minutes could become 30 and 40 minutes, and I would not run into another appointment and apologize for being late and what have you. And if I was on time, it gave me time to prepare better for the next appointment. So I was always winning. So that was my practice, but you can't always do that with everything. But that's one way to get into the mentality of planning. Budgeting is really planning. And so planning resources, and it can be costly if you make mistakes and etc. And that's what the whole planning aspect is. Just usually you plan with a team, uh, always better with a team because it's never entirely your fault. It can be the input of everyone, and we all work as a team. But I know one thing, we all work as a team, but there's always one person responsible. So you just work together and do the best you can with experience. Okay, well, Cadison, thank you very much for your time. I hope you get something out of this, and we'll catch you on next week at 10:30.
10:30 on Tuesday.
Okay, then I'll on Tuesday, that's right. So I'll send you an invite for that. And
Perfect.
do you have any questions at all this far?
I just had one question. The separate entity that you were talking about at the very
Yeah,
start,
yeah.
is that the same as the accounting entity convention?
Um, no.
No.
In legal terms, um, you are an entity, just yourself.
Yep.
Um, you and your wife, you and your husband, if you have a husband and you've got an account, it's still in both names, so it's a name of two entities.
Okay.
But if you and your partner decided to operate a business, you would create a new company called, Gene and Bob Furniture Manufacturer. Then that becomes registered as with ASIC as a company, and that company is not you, is not your partner, it's an invisible person called, what did you call it? J&B Furniture, whatever. So, which is very important because if that company borrows too much money or ends up into financial trouble, uh, the it cannot be sued in your name or in your partner's name. It's got to be the dealing was with that company gets sued. And the directors usually have got, if you wonder what proprietary limited means, it means that this company is limited by proprietary, which means that in Australia, when you start the company, you give yourself and your partner or your other people in the company $1 share. And if someone was to sue that company, they can only sue that company for $1 per person.
Mm.
So you yourself could have thousands of dollars in the bank, but it's not you yourself. That company is not you yourself. It's whatever company it is, and therefore that company has bought a car, whatever, but it's responsible for what it's doing, but it's not you. Therefore, you are a separate entity, completely separate entity.
Gotcha.
Although you're still the same person, you know. So I said to my wife, now I put my hat as the chairman of Leadership Australia, and I take off my hat now, and I go um, as the senior assessor for the ARCPT. Um, and it's important because if you send an email from a separate entity like Leadership Australia, then it is legally Leadership Australia speaking. It's not me speaking, although it's me writing the email. It's me as Leadership Australia with a limited liability of $1. That's important if you make a lot of money, right? And if you get a profit and you distribute the profits to the directors, I will get, say, $20,000 profit, but I'm still limited. I've got still a limited liability of $1 if someone wants to sue me.
Crazy.
That's the only way business can work, because can you imagine if you could take to the cleaner anybody whose company fails, you'd have no company. So to be fair, you accept that people are prepared to create business, create employment for other people, take a risk, and in the hope of some profit as well. But if anything goes wrong, you cannot sue that person for more than the $1 liability. So that's why you have a company, proprietary limited to $1.
That's actually so interesting. I never knew what that meant.
Yeah, it is. Yeah, proprietary limited. And the first thing they ask you when you register, ASIC will say, okay, how much are your shares? Just to give you an idea, it is so important because a friend of mine started doing, he encountered a policeman and another man who was a dog trainer, and he was a security guard, and he had his own security guard dog and license and what have you. And they started to create this company. And he said, well, I'll put in $30,000 in the company. But they did not do anything with proprietary limited. Okay. So it was a partnership. Now, another entity is a partnership. Now, a partnership is different again. Partnership, if you have two people make a partnership, then those two people are liable 100% to the loss of that company. I was a partner with my father running a business at one stage, and when things went wrong, Dad got so upset, he said, I'll leave it all. I'm going to France now for 3 months of the year. I'm going to go on holidays. I'll let you deal with all that. I saw an accountant, and he said to me, well, you're a partner and you're fully responsible for all the losses of this company. But you're also responsible for all the equipment or the assets of that company. So providing your father gives you his shares. So I said to Dad, well, Dad, you leave me with all the problems. Can you write a letter saying that you give me your shares? So instead of a partnership, now we are one entity, which is me. So we did that. And then for the next 3 years, as much as I was working for another company by then, for the next 3 years, I claimed the losses of that company and claimed all the losses and got deductions of my taxes for $3,000 every year until the thing was finished. So it was really worth doing in my situation. So that's another entity. Partnership is an entity. A proprietary limited company is another entity. And you yourself are an entity, and your partner is an entity. We're all entities, but we can create an invisible entity called a proprietary limited or a partnership. Yeah. So that makes life exciting,
Yeah.
providing you know the rules,
Yes, yes.
pay attention to them along the way. Right.
Perfect.
So that was the only question you had?
Yeah, that was the only one for now.
Okay, no problems. All right. Well, we'll catch you on Tuesday next week.
Yes, sir.
Thank you.
Thank
Okay.
you. Have a good day.
Bye then. See you. I better stop sharing. I better stop recording as well. Hmm.